Hey, hello everyone. This is Stop Losing, Start Trading with the Panoptic team. So this is where I go over the Panoptic app, but also options trading concepts with Rosalie, so that she can become a better trader and hopefully stop losing. So how are you feeling today, Rosalie?
Good, good. Yeah, the market looks pretty steady right now. Nothing too crazy. Been watching some new market creations on Panoptic, so that's been really excited. Overall, I think the weekend was pretty mellow, so I'm just curious to check back in on the intern's recent
And it's
trades.
surprisingly, yeah, surprisingly, a threat of tariffs or anything like that doesn't move the markets as much. So, old news now. So that was fine. But yeah, we can go over the market. It was kind of an a uneventful weekend, as you say. We tried to go over the price action before we dig a bit deeper into the actual trading tips. But yes, everything seems to be going horizontal. It's all green, but it's basically up by a little if you compare over the past week or 24 hours. But overall, it's pretty choppy back and forth. Again, with ETH, despite these kind of rather large price drops we've seen, it's still fairly recovering. Actually, yeah, I didn't see this happening over the weekend. So regardless of what happened, the market recovered. None of that might have a long-lasting impact. So we've been maybe on the downward trend over the past month, but it's fairly choppy. Despite these kind of large moves, we've been kind of range bound, which is good for an options trader where you sell options. You can actually get to a point where the delta neutrality of your position can be limited. So I don't think there's any big outlier in the market. So Solana is also going sideways. Depends what comes up. Nothing very, very important. Let's look over at our friend Avera just for a little bit. We talked about it on Friday. Um, it's been it hasn't been the best launch, but I think now it's the craziness of the first week has subsided. So any comment on Berachain, Rosalie?
Yeah, no, I think I'm really excited to see everything flourish at Berachain, all the projects launching. Yeah, I'm surprised the token is kind of dropping now, but I guess, with all their investors and a launch that does make sense. Curious,
I
yeah.
mean, yeah, I don't know if you see that take saw that thing, but Archer Hayes said that it's basically when you start listing it, you have to be careful at the initial price. And if you price too high, of course, the market will find the correct price. So had they launched maybe at a different valuation, it would have been maybe a different story. But it's just pricing it probably is a huge part of that.
That makes sense. Yeah. I'm sure it'll level out a bit. Although if this isn't, I mean, what was it before? It wasn't that, yeah, okay. I think, yeah, maybe under $10 is better.
Yeah, but overall, again, there's Berachain coming, there's Mega ETH, there's Monad. A lot of the new chains kind of all launching this week, so or at least this month. It's going to be very interesting to see where it goes. But yeah, so this is the market. Rosie talked about the the new markets being created. So we have this kind of cool thing about the Panoptic ecosystem where you can actually create a new market the same way you create it on Uniswap. You choose a pair, you choose a feature, but we issue a pretty cool looking NFT to the market creator. And you don't have to, oh yeah, you don't have to do it. Um, okay, my stuff is there. Sorry. You don't have to do it in a way that is kind of, you can do it on any pair. So if you go to the markets page, I'm going to show maybe how it's done, but it's fairly easy to see all the markets that you could create a new position on or a new market on. And it's as simple as this is what's been created. You can see the create market. This is the Uniswap pools that exist that haven't been created into a Panoptic pool. So in that case, it's actually pretty cool to see the markets, people creating a bunch of markets. So again, if I were to create a new one, I would just go to create market, and from there it's going to bring me to the page where I can choose, and from there you can get issued an NFT. So going back to Twitter, the the Panoptic NFT collection is where you create a new market and you get issued one. So this is the USDT USDC 100 bit pair the person creating that market got this on-chain generated NFT being issued to them. And this case is a Jade Lizard. We put a nice description. So this is something that, again, we have a Twitter account. You can follow it if you want. It's actually fairly fun to look at. So yeah, you were paying attention as well over the weekend. So anything that we should look carefully at about these NFTs?
No, I think they're really interesting. The rarity, you know, each one has a different generated rarity, and yeah, I'm curious to see if people, you know, want to trade them or just kind of want to collect them, and where the future of these NFTs will be.
Yeah, and just so that we can describe this a bit in more details, but this is all on chain. This is in SVG, so it's a vector graphic that's generated on chain. The rarity is the number of leading zeros to that pool address. So you generate a new market, there is a new address that has to be created. Number of leading zeros, so you can mine those the same way you mine maybe a Bitcoin block. So this one is Quixotic, which is rarity 5, and as Rosalie mentioned, you have different types. This one is 6 enigmatic, and the more rare that NFT is, the cooler looking it looks, maybe. And then also the more work you have to put into in terms of mining it. Again, could be with your browser, could be with a GPU, could be with a vast.ai instance. But at the end of the day, it's actually very, very fun to see people creating markets. It might be also just for the people to create these markets and see what the next. It's a bit random, but you can kind of direct, but what the next type of design is. So all of those, feel free to follow the Panoptic NFT account, and again, we'll take a closer look on it. So that's very cool. Back to maybe the trading page. When you do want to do it yourself, you can go on the Panoptic trading app, and then you can choose your market, and you can see what the actual generation is going to be. So you can mine different types, and if you're patient, maybe you'll land one that is a high rarity. This is all commons. This is a rare one, Iron Condor. So yeah, feel free to create new pools, but also when you create a pool, you can deposit some funds, start trading options on it. The FTM token, I don't know how much it's traded, but it's actually available. You can create one very quickly. And the key point is that if there is a Uniswap market that exists that has a bunch of liquidity, then you can create a Panoptic pool on top. So this is very cool. I guess we will see more and more of these be launched. It's very decentralized and permissionless. We welcome everyone to try it out. Otherwise, back to the matters at hand, which is for Rosalie to, I guess, discuss her trades. What we've been doing over the past few weeks is starting with a token that Rosalie wants to trade, and we go with the directional assumption, if you want. Are you bullish, bearish? And then from there, we just construct a trade that makes sense for that particular day's kind of directional bias. So this is us describing this, but it's the intern.panoptic.eth account that trades. So here we're just discussing trades. We discuss this in the open. None of this is financial advice. Sometimes the intern listens to us, or sometimes they don't. So we just discuss this, and then we can see how the intern is trading. And then from there, again, it's us describing these trades. So again, no financial advice. Don't use this yourself unless you do your own research. But yeah, without further ado, we're using the spectator mode, and we can spy on the intern panoptic.eth. This is the 3 markets we were into: Colt, USDC, and BTC. We discussed a ticker Bitcoin trade on Friday. Maybe the intern was busy, so this one has not been created, but maybe we'll go over it again this today. But yeah, which are the 3 markets are you most interested in checking in, Rosalie?
I guess Colt, the buying power looks awfully high, close to being liquidated at 100, right? So
exactly. So just brief review: if you're trading, you have the markets that you're participating into. The buying power usage, it's a little bit like leverage, but it's a slightly different definition. We can you can read this, but the key point is that if it reaches 100%, 0.01 or higher than 100%, you get liquidated. So now it's at 94%, and we started, I think, at 80%. So we'll see why it's going up. But yes, let's open up the call trade. This was buying a put option. We show kind of the P&L chart. I'll show it in USDC. So you seem to be losing a little bit. You had $60 or $100 of collateral. You're paying a little bit. You're on the downtrend. This was a trade that was opened 9 days ago, and this is the P&L chart. This is the payoff. So what do you see here? What's your take on that page now?
Yeah, I guess my take is that well, so because I was buying an option, or intern is buying an option, the fees, I guess, accumulate over time, and because it hasn't shifted enough into the green yet, those fees have really kind of done a little bit of damage. Although directionally, I mean, the price has gone down, just not enough. I guess maybe it would have been smarter to buy an option instead. I mean, yeah, to sell an option instead.
Yeah. So it all depends on what you want to do. Again, here we're a bit agnostic. The price was quite violent over the few days before we created that trade. We started here, which was the Pico top. So again, you were pretty much right directionally, and the price went down. But when it's the case for buying an option, it has to go down by quite a bit to make a lot of money. And if it goes down by a little bit, which is what we see here, it started here, it went down maybe 5-10%. You're still in range, so you're still paying at every block. So unfortunately, you're paying 14% of that position is now being paid out as premium. And the price moving hasn't helped you much. So you lose 14% in the premium, but you net is 10% loss. So you still made 4% profit because it moved, but then the price is, or the price is in range, so you lose and pay. So this was a Hail Mary trade. You had some call token you wanted to double down, maybe on the way down because you got burnt. If the intern is comfortable, the best thing is still to wait and maybe get liquidated, and you'll be out of that position entirely. Maybe you'll have some levels, some amount of tokens left, but it's not going to be a huge slam dunk, or maybe it does if it does move quite a bit. So buying options is this wait and see, but you have to cut your losses at some point due to that premium accumulation. So yeah, interesting trade. Unfortunately, hasn't worked for us, but we'll wait a little bit. It's been 9 days. This position is in the monthly, quote unquote, time scale. So we're, again, maybe 25% through the trade. It hasn't worked for us. Maybe in an extra day, an extra week or a few days, we'll be liquidated. But overall, it's just hasn't worked for us, but nothing wrong has happened. It's just we were a bit wrong directionally, but nothing more.
So what will have to happen in order to get liquidated, I guess?
Yeah. So this is the premium that you pay every block. And it starts at 0, and you pay more and more. This is called tokens, but you pay more and more of these tokens every block that happens. And you have some collateral locked up. And this collateral is used to pay for that future premium. So we reserve 10% of the option's notional value for paying the premium. And we were a bit more conservative because we're at 14% use, and it's still fine. But yeah, you start with a position that was 200,000 called in size. We reserve some funds for that premium, and then this will get kind of deducted every block that you pay. At some point, you'll reach a point where you've used all of that locked up capital that was set for collateral. We have to liquidate you, meaning that we seize that fund, pay what you're supposed to pay, and at the end of the day, you get some back. So if the price keeps being choppy and not moving either way, that liquidation may happen. So if you go back to the dashboard, it's actually yes, the dashboard will show it's at 94%. Oh, and I would say that it's. Oh, let me go back. We still have to be in a spectator mode. So maybe intern will rescue it, but we expect this. So just now it went from 94.19 to 94.20%. So it's gonna go up, and at 100, utilization to get liquidated. So it's fine. It's a meme coin. It does move a lot. Maybe it didn't move that 1 week, but that's fine. So Colt, it's just a Hail Mary, will wait. What about the Bitcoin and USDC or ETH market? Which one do you want to look at first?
Yeah, we can do USDC.
Okay. So in
Let's
this
go right
case, again, for the overview, same buying power number, which is 5%. This is a good sizing. You don't want to put all your eggs in the same basket. And that 5% is what the position uses. We're making a bit of profit. We'll show you're making a bit more in terms of of Streamia, but this was a position we opened up. Uh, this was opened up, I think, on Thursday. But this is a at the money strangle or at the money straddle that intern opened up. If you and then maybe yeah, what's your take? What do you see here? How do you react?
Not reacting yet. I think because it was a quite small percentage of all of the collateral. It's pretty. It was a pretty small, I guess, bet, and so there's not much to lose yet. So we're kind of still in the
But
green.
the green
But
is what you want to see. You're making money, which is what you want to be at. Here, you're yes, you're in the green. I can scale it up. You are indeed in the green, whereas before it was mostly red. So here you're in the right range. The fact that you earned some premium, here we earned $10, and this is fine in a few days. So 0.5% in 3 days could be more if you do the analyze. But the key point is that you're earning fees. You get paid for that risk, and that widens your break even point. So we started when the price was 2,700 thereabouts, and any move out of that price meant that you were losing when we first set up that position. Now, because you're earning, your break even points moved from 2,540 to close to 3,000, 2,940. So here you see that the price can move quite a bit more, and then you'll still be in the green, meaning you make money. So what you want to see with this is to have your assumption, which was it's going to be range bound, be realized. But the more you wait, the wider your break even point. So you don't have to worry if the price stays above 25.50 and also below 29.50 as well.
yeah,
So
I
it's
think it'll keep collecting fees probably for a while. This looks pretty.
exactly, this is what we want to see. So again, this is one of those other positions which is fairly well deployed in a good way. It's working for us. There's nothing to worry about. You may see, oh, it seems to be moving a little bit, but because we're in that delta neutral zone, it's actually pretty flat. So there's not much loss that happens because it moved. And yeah, so that's a good one. So the size of that position, if you see here, it's two legs, a put and a call, all sold at the same strike. Uh, the If you go back to the delta discussion that we had, delta is one of the numbers you want to look at for any position that you're about to open or that has been opened. In that case, the delta of the put is 58, and the delta of the call is negative 42. So if you add them up together, it's actually fairly small. It's going to be a delta of about, again, 10 or 15 ish. And it's telling you how sensitive you are to price moves. Even though this position is controlling $2,000 worth of capital, because the deltas are so small, if the price moves $1 or $10 or $15, you won't see a big change in price. So delta neutral in options is very, very attractive because you create wide break-even points, positions that make money if it stays in range. And that range was also fairly large. So we're still in a good spot, meaning that there's nothing to worry about. Even if it does move in the negative zone, you earn fees. So as long as the price stays within that bounds of price that you see here, you have to wait. So overall, very, very good setup. Nothing else to do. We just wait. And again, if you remember, this is $2,000 worth of capital or notional value we control, but the requirement is much smaller, about $450. So we have something like a 4x leverage in that position. If you were to do the same position in Uniswap, you would have to put $2,000 worth of capital to actually create this. Here, because it's in Panoptic, we have this margining system. You only need $450 worth of capital. So the fees you earn is in that 2,000, but you earn this only by putting $450 of capital.
It is quite small size of a position, though. I wonder if maybe it would make more sense to open another position in this pool to kind of spread out profits across
Maybe
different.
so. Yeah. So the position size that we have is 5% of the buying power. We could open a new one, two or three. It's uh, this is when you can be a bit more directional or reacting to the market. If the price moves down, and this is what we've seen as well. If the price does move down, maybe the past few times it did, it went up right away. So you can time the market and kind of buy the dip type of thing. So there's an options trade that could happen after a large move. And again, it's all about probabilities. But you can say, okay, even though the price went down, I think it's going to go back up. So there's a trade for that. So it's good to keep some capital available. So because now, even now, the price hasn't moved too much. We're in maintenance mode when we're, and this is a good piece of advice. When you're options trading, you're like a hunter or a predator. You're waiting for the right opportunity to pounce, I guess. So the current market is good, choppy. You have a few trades that are there. Your goal is to not be overextended, because if there is a huge price move, you have a small position size and you can actually have capital available to not double down, but capitalize on that move. So we do this every noon, 3 times a week. So it might be hard to catch this exact moment, but if you're within a day, typically you can do some of those trades. So I understand your point of saying I want to make more money, but the role of an options trader is to at least on the sell side, manage risk, but also be able to capitalize on interesting events, which seem to happen quite frequently these days. And if you look at the trends, large price move down, maybe it stays choppy or it goes back up. So that there's a few trades that you can do there. We haven't seen price ripping through the all-time highs yet. This is a different type of trade. But yes, I would say your instinct is right. You want to maybe capitalize on it more, but it's the most risk you can have is when it's quiet. When
Okay.
the world only ends once. So after there is a huge crash, it's going to be slower moving, so you can capitalize on it type of thing.
Got it. Okay.
All right, so we'll finish with the last one, which is going to be the Bitcoin ETH ratio. So we can trade the ratio on Panoptic. Sneak Peek will likely launch a BTC USDC market on the PIPS program, where you can also trade the actual price as opposed to the ratio. But for now, the ratio has been going well. So in that case, yeah, if you look at the first row, what do you look for and what do you see on the first row? Right?
Yeah, I think P&L looks good, and buying power usage is, I mean, it's getting up there, but nothing too drastic yet, right? So
Yeah. So
yeah.
this one had $1,000 of collateral, and we used 43% of it to create a position that is earning $14 in fees. This was open 5 days ago, so last Wednesday. We can go from there. It's a call spread, and this is the type of payoff that it is. But it's also doesn't seem in trouble, or you don't need to nurse it back to life. So let's have a look at the actual P&L curve. So here, yeah. So we have this position. And again, what's your first take? What do you see on that position?
Yeah, I think, it's still in range. It's getting kind of close to kind of, I guess the price movement wasn't that drastic, but
You were right
yeah,
directionally. This
yeah.
is a bearish trade, meaning that you think the ratio is going to go down.
It's just,
And yeah,
yeah, it's very close. So I'm not sure how that's going to look over the next couple days. But right now it's still good. I bought an out of range option, still in range, so making some fees for now.
exactly. And this is a similar one as the units is in BTC, but it's similar to the other one where it's working the way we intended, or at least it's not going against us. We you started here, the price went down, which was your directional assumption. You're in range the whole time. You're earning fees. Currently, you're earning two 10,000s of a Bitcoin. Same thing as, but you have 1% in return on the fees collected, 3% in 5 days on the directional price. Yeah, there's not much more to do. Even if it were to move the other way, it's still in range of earning fees. If it were to really collapse, we know we have a maximum profit, which is what we may use as a way to manage that trade. But for now, Nothing more than just waiting because it's doing exactly what it's supposed.
Cool. That makes sense.
Okay. So, and then one thing that we also kind of maybe, yeah, going a bit further, the one trade that you're creating is capitalizing on liquidity that has been kind of maybe abandoned or left without being managed. So you purchased this call, which is out of the money, out of range, and you sold another one closer to the money. So you're relocating, you're borrowing or moving liquidity from that strike, which is very, very far from the current price, and moving it closer to the current price. This is a call spread. This is actually very, very smart as a trade because you're doing it in a way that's very capital efficient, and you don't even have to kind of put your own capital there because it's buying something, selling the same amount. So it's very good. One thing that you notice is that you purchased a lot of it, and in that case, the amount that was sold is that larger rectangle, but then you purchased almost everything out of it. So there's a tiny amount left. And what this means is that this position now, because you bought so much of it, you will pay more in fees than Uniswap. And in that case, it's the most we can allow, which is 3x the fees on Uniswap. So if we do that, the fees will be quite high and we may need to manage this. But for now, because it's out of range, we don't care as much and it's not going to be impacting your P&L. So that's kind of one, not flaw, but one loophole that you can buy an option that could be very expensive, but it costs you zero now because it's out of range. The flip side of that is that you also sold an option and you also have other people that are able to buy it. So in that specific case, you and not you, but that option was sold up to a certain level, and some people bought some of it, purchased that, and you're part of that strike. So that means that you started with selling an option that would pay you exactly the same amount as the Uniswap fees, but now because someone purchased it, you earn 10% or 1.09 or close to 9% more in fees on the part that's been purchased. So this will actually make you more money than Uniswap. So you kind of doubled it. You do it by borrowing someone else's misplaced liquidity, and also you sold in a way that made it so that you also earn more fees because someone decided to buy it. So that is maybe a trade that people should look into: is where are people buying options? It means this is where you can sell more because you'll make more as a seller. So it's a very, very PvP driven. You go where buyers are. If all the buyers leave, maybe you could also kind of close your positions as well on the short side.
Yeah, I think there were some other more bars, liquidity bars, available where you could also buy some more and move them
Yeah.
in range. I'm not sure how often you want to be doing this, but yeah, maybe there's another opportunity there.
Yeah, and especially if it's directional. Here, depend on what you want to do. But if you're directional, you should expect to never hit that higher strike, because if it's delta neutral, you're pretty sure it's going to go down over the next month. You probably don't hope you don't expect that to be hit at all. So that's actually a directional trade. You should maybe be more inclined to buy or relocate liquidity. Whereas if it's delta neutral, you don't know, so the trade is a bit different. But for directional plays, at least, the intern has done it, and then I'm doing it as well. But the key one is that it's a prime opportunity for relocating liquidity.
Cool.
All right, so I think that's it. So quickly, let's go back to the trade that intern did not do. We had a ticker Bitcoin trade that we set up, and this was a 30 delta put that we're trying to sell. And this is ticker Bitcoin again. You can just go to the trade page. And when we were doing this, we went through the process of choosing the right sentiment, which was bullish for you. This is a market that is kind of traded, but not that much. So we elected for selling an option. And in that case, maybe that's the next one that we'll ask intern to do. But we sold it at the 30 delta option, 30 delta strike. So we discussed delta last time. Because can you remind me and the audience what does delta mean when you look at it in terms of probability?
Yeah, I think delta means that if it's a 30 delta, it means there's a 70% chance that your bet is correct.
Yes, and this is kind of the superpower that options trading gives you. It's probability based. It's not technical charts or lines that kind of converge in a specific pattern. The market prices these options where if you think it's wrong, there's a trade for you. If you think it's right, there's a trade for you. It all converges to being pretty accurate most of the time. And delta is that kind of super nice way of kind of realizing that market sentiment. So here, 28 delta means there's a 72% chance that after a month ish of time scale, which is what this option is, you should be right directionally. This is a positive delta. You'll be right. It's going to go up. 30% chance is going to go down, or 28% chance is going to go down. If you average this out over many, many trades, it will converge to 28.72. If you do it once, it's a binary outcome, but it's where you have to do this consistently, following your kind of best practices, and get to a point where you can recreate these trades. So 30 delta is where I want to be when I sell a new option. Want to have the odds be in your favor, so you can bang several wins and maybe a much lower number of losses. But yeah, so this is another trade the intern can do. I think I'll paste this as well in the chats that those on YouTube could have a look, and otherwise you can have a you can rewatch this and you can do it as well. So Ticker Bitcoin, maybe this is what we'll discuss next time. But yeah, for now, that's the next trade.
Good. Yeah, I think it looks like it's going to be a little pretty profitable for what I see now, but we'll see what the price does.
Yes, up to the right, and yeah, we won't look at the chart, but yes, Bitcoin deserves to be higher than that. So we'll hope this happens. Okay. So again, I'll keep it short for today. So nothing to do in the existing trades. Now would be a good time to revisit opening a new trade. But what a retail user like Rosalie or anyone in the audience should think about is spreading the risk a little bit, sizing appropriately. You want to be in like 3 to 5 markets perhaps. And that means that if one goes down, the other one can kind of offset this. So you don't have one trade that you pray and hope that it's going your way, but you have multiple smaller trades. And with the power of probabilities and options, there's a lot of strategies you can diversify into. You have 3 to 5 markets, maybe 2 to 3 different strategies. It's just a way to kind of express your views on the market that's a lot more versatile than just kind of buy and hold. So
yeah, I'm curious to see if the liquidation bot will kind of kick out that cold position today. So I'll be taking a closer look at that, and we'll discuss that next time.
yeah, so we have a liquidation bot. I don't think it looks at the cult market. It tries to focus on the big ones. So there might be an opportunity for someone to liquidate. So that's also another thing to look for. So amazing. So yeah, thanks very much. This is it for now. This is Stop Losing, Start Trading with Rosalie. We've gone over the market, we've gone over the trades, set up a new one. We're trying to do this consistently so that people can learn with Rosalie, but also see how again the Panoptic team thinks about doing new trades. And yeah, maybe any last comment on your side, Rosalie, before you take off?
Yeah, I'm really curious to see kind of the next things happening in the market, and maybe we'll think of another pool to perhaps tap in or a different trade with Bitcoin, because I think right now people are a little bit less bullish or bearish. The market's kind of neutral, so just kind of figuring out what the best thing to do is to make some money in
Perfect. And maybe so we'll discuss this more on Wednesday during Options Hour. But maybe can you give us a sneak peek at the ETH Denver event that we're organizing?
Yeah,
And then I think it's live now. But yeah,
we're going to be hosting a side event at ETH Denver. It'll be on Friday the 28th. I'm very excited to kind of, meet new people, reunite with old people, and see all the booth, walk around ETH Denver is always a lot of fun. So lots of things to do there, and anybody's welcome at our event. We're going to kind of spread some more alpha and have really interesting talks from industry leaders. So it'll be fun.
exactly. And the name of the event is Panopticon. So we'll post this on our socials, but also look at the regular places where the side events get posted. And yeah, we're looking forward to seeing you there. So yes, thanks. Maybe one last thing. Let me use this. We have the ability to look at comments in real time. We welcome people asking questions. This is a very, very good one that we can look at. So someone Louis H from or Louis, their username asks, can you add a stop loss? So 1x loss on your position. So in the options trading world, stop losses aren't used as much, and there's a clear reason why. It's because the price is maybe less stable. If you're trading an option, there's hundreds, if not thousands, of market in, say, the S&P 500 and thousands in the Nasdaq. So all of those make it so that sometimes some strikes are not efficient, and people can see this and they could kind of wipe you out with a stop loss if you were to say my put option, if it dips below, I sell and back. So it's not as much used in the options trading world in TradFi. So that's why typically you have to be managing it. You have to be staying far enough from expiry so that these moves aren't as drastic. And if it does move back down and up, it's not going to liquidate you. So that's why position sizing. So more generally, stop losses aren't as useful in the options world in TradFi. In DeFi, on Panoptic, since we're also part of the EVM and the blockchain, we don't have an order book. We don't have orders. Could be this. It's always limit. There's no bid or ask. Bid ask. There's no stop loss that could be implemented. Maybe in the future, but at the end of the day, the best way to manage a trade is to have this be in a way that you don't feel sad if you lose too much on the downward or upward wick, and make it so that the trade is still working for you afterwards. So even if it moves and dips, if you're earning fees, if you're in range, if you use a wide enough position, even if you look at it 8 hours later, 12 hours later, it's still going to be manageable. So that's kind of the overall sentiment for me personally in terms of stop losses, but also option trading. Trade construction can save you a lot more headaches than trying to do a stop loss to kind of cut your losses. So that's kind of the idea. But yeah, perfect. Thanks a lot. So yeah, so we like these questions. Feel free to ask. We will. This is on YouTube, so the question from YouTube, but we live stream on YouTube, Twitter, and kind of we'll make kind of we'll edit these videos, try to publish this so that you have kind of a good place to kind of get references. So yeah, enough talking. Thanks you guys. This was great. And yeah, we'll see you on Wednesday for Options Hour. A little bit of trading management as well, but also with Brennan or maybe Izzy as well for Options Hour to discuss the market. So all right, that's it.